Hi there. In our video looking at the detailed financial objectives businesses set, we discovered there's a wide range of objectives that could be used, but what influences which objectives are chosen and at what level they're set? Let's take a quick look. Don't forget, an objective is a specific target, a specific goal that the business tries to achieve, and financial objectives therefore are in relation to both the financial performance of the business, sales, profits, but also the resources and the capital structure. And there are a variety of objectives a business can choose to set. They don't have to choose all of these. In fact, they can choose none of them. But most businesses have one or more financial objectives. And what they choose to use and how they set them is influenced by factors that are within their control, known as internal influences, and outside of their control, external influences. So let's spend a minute or so just looking at two or three examples of internal influences, first of all, that might affect financial objectives. And the first one is an obvious one: who owns the business? Let's take an example here. A business perhaps is a long-standing family business, been owned by the family for many years, perhaps several generations. Maybe it's profitable. Well, it could be that the financial objective is just to continue to earn a sensible level of profit, not take too many risks, continue to earn a profit that the family can enjoy and spend and invest back into the business. That would set the scene for the financial objectives of the business. However, if that business was then bought or invested in by a venture capital investor, then all of a sudden the financial objectives are likely to change, perhaps much more geared towards faster growth in terms of revenues and profits, perhaps a greater attitude towards risk-taking than the family might have done. So you can see that the ownership of the business can influence the nature of objectives set. And so too, of course, does the size and the status of the business. Time and time again, we find that startup businesses and smaller businesses have objectives that tend to be more focused on, first of all, survival, but then achieving break even and achieving a positive cash flow. If you take a look at the objectives of more complex, larger businesses like multinationals or companies whose shares are traded on stock markets, public companies, they have more complex and wide-ranging financial objectives, but often much more geared towards achieving target returns on investment, target rates of profitability, perhaps an operating profit margin, or sales growth. And lastly, another internal influence is going to be the other functional objectives. For example, if the business has an operational objective based around improving efficiency, reducing unit costs, the financial objectives are more likely to be focused around cost minimization. Similarly, if the marketing objective is to increase the market share of the business, then the financial objective might be more likely to be one around higher or faster revenue growth rather than necessarily cash flow improvement or cost minimization. So there are internal influences, and obviously there are also factors outside the control of the business which will also influence financial objectives, so-called external influences. Let's pick out a couple of these. Well, firstly, the economy, of course. Economic conditions change over time, not necessarily overnight. However, for example, in the case of an economic downturn where economic growth falls, maybe unemployment increases, demand for the products and services of a business may fall. It could be that in those situations, businesses set financial objectives that are more around sort of battening down the hatches, keeping costs minimized, trying to maximize the cash flows of the business to weather the storm of the economic downturn. Similarly, a significant change in exchange rates may affect financial targets like profitability objectives or return on capital employed. And obviously, no business operates on its own in a bubble. All businesses have competitors, and the change in the competitive environment is also going to influence and affect financial objectives. So, internal, external influences, they are quite complex, but they will undoubtedly impact the financial objectives that are set by businesses. So hopefully this overview has been useful to you.